Now, we will hear more about the foreign direct investments in technology through a thought-provoking conversation between our two exceptional speakers. Mrs. Courtney Vingar, our interviewer for the session, is editor-in-chief of Investment Monitor, a digital publication focused on foreign direct investment launched in September 2020 and is part of Global Data PLC. Before joining the group in 2020, Mrs. Fingar spent 15 years with the Financial Times, where she was editor-in-chief of FDI magazine and the head of content for its associated data division, FDI Intelligence, as well as a contributing writer for the FT newspaper. She will be interviewing Mr. Christoph Rich, Group Chairman and CEO, Rich Corporation Group, who will be tackling the questions on FDI in technology. Mrs. Courtney, the digital stage is yours to lead.
Hello, and welcome to this keynote interview session, which will focus on the crucial topic of FDI in technology. I'm Courtney Fingar, Editor-in-Chief of Investment Monitor, a digital publication focused on foreign direct investment. I am delighted to be leading this interview, and I cannot wait to hear what our guest has to tell us. Now, technology is perhaps the single biggest driver of FDI flows globally at the moment, with tech sectors being among the few showing growth in terms of cross-border investment since the pandemic. And of course, the increased reliance on digital platforms and tech tools means tech sectors will continue to lead FDI flows and help bring the market into recovery. So to help us identify emerging tech trends and the opportunities they present, we have with us Christoph Rich, Group Chairman and CEO of Rich Corporations Group. This is an active holding company for a diversified portfolio of international businesses working at the intersection between real estate, technology, and financial services. In 2020, the group deployed over $1 billion, investing standalone and in collaboration with some of the world's leading sovereign wealth, endowment, family office, and other long-term investors. An entrepreneur and investor for more than 25 years, Christoph has a track record of identifying, realizing, and scaling transformative innovation. After beginning his career in investment banking, he created the Iceberg Fund, one of the first ever long-short real estate hedge funds to use property index derivatives. In successfully trading on these markets, Christoph further built up his expertise and in-depth knowledge of the real estate asset class and real estate data, which he's taken with him into his later investment and business building. So as you can tell, he is ideally placed to talk us through the key trends driving FDI in technology. Christoph, welcome, and thank you very much for joining us.
Thank you very much for having me. I'm absolutely delighted to be here today.
Well, first, let's talk about the big picture in tech. As a seasoned investor, what areas are you most excited about in the digital transformations that are taking place globally?
Well, obviously, as you rightly mentioned previously, we are very active in sectors such as real estate, financial services, and the combination with technology. And this is where we are looking for transformation. Now, what is really exciting about these sectors is that the revolution, and I use revolution on purpose, is already underway. A lot of people will tell you it's coming. Actually, I can tell you as an investor, as an entrepreneur, that this revolution is already underway today. And in fact, we are seeing three major topics which are converging already in these segments. And the segments that we see converging are quantum computing, artificial intelligence, and the Internet of Things. And the net result of all this is that we are seeing actually the cost of technology going down and the speed of what we are doing going up. And that is a major transformation. And when I say a transformation and revolution, I mean that we are really in an environment where the scale of that transformation is generational. So we had other industrial revolutions which changed the way we live. I do believe very genuinely that this is one of them. Let me give you a sort of a rough idea of where we are versus where we could be. And I give you three statistics for that. Okay, the first one is the overall e-commerce around the world today represent only 18% of the overall sales and retail transactions around the world. So there is a long way to go. The second number is 70 to 90% of the data around the world are still unstructured. So there is plenty of data, but nothing has been done yet for making this data being usable by everyone. And then finally, and this is a more geostrategic probably comment and statistic, is the cost of 1 gigabyte of storage is around $8 in the US. It's around 10 cents in India. You will conclude what we could do with that.
Well, yes, the possibilities are endless, I suppose. Can you give us an example of what else is changing and what other major global changes are being driven by technology? I mean, one that might come to mind is energy efficiency, which is a major push now, both from the public and private sector. How might technology enable that?
Yes, this is a very good choice, actually. Anything which is linked to energy efficiency and smart cities as part of the same concept. As you already mentioned, I'm an investor in the intersection between financial services, real estate, and technology, and clearly the energy efficiency is totally part of that environment. So let's just start with the beginning. Today, if you take a building, maybe some people in this audience would be aware of that, but 40% of the energy consumed around the world are used by buildings. And buildings are actually contributing 36% of the CO2 around the world today. So there is no way we can have any discussion about sustainability, climate change, or any environmental concept without talking about real estate. Energy in real estate is absolutely crucial. In order to try to understand how the situation is today, maybe let me explain to you how currently buildings, real estate assets work. So first of all, very few real estate assets are ready today for complying with any sorts of environmental policy. Very few. Okay, the number is actually very low. And secondly, most of them are managed by systems which are very siloed in what they are monitoring. So they're monitoring CCTVs, or they're monitoring lifts, or they're monitoring very segmented, and so they don't have a holistic approach to these buildings. Another point, I just take a statistics from the UK, and I'm trying to brush the current situation in that world. The current situation is that take the UK, and I'm sure it's the same in most of the other countries around the world. If you take the UK, you would have very little number of buildings which are ready, and it takes 2% of these buildings actually would be able to be refreshed and brought to a satisfactory level of compliance per year. 2% of these buildings per year. So do the math. How long will it take us to get the entire stock of real estate today on the planet to be compliant with any sorts of policy? So clearly, there is something wrong about the way we address the problem so far, right? So the second thing is, because there is something wrong, we thought about putting some metrics around it. So then we had a sort of huge number of people coming up with ratios, metrics, indices, of ESG or climate change or environmental data, and trying to measure things. But the problem is that, first of all, there are so many of them that nobody really understands what they are and what they really do. And even worse, they don't understand how they would affect anything. Consequently, they just try to comply with these numbers, but that's it. There is no action on the back of it. The last point is that the current technology which is used in this existing stock is a technology, as I said, it's siloed on what type of thing is measuring, but it's also siloed on the environmental side too. It only measures a certain number of environmental data, certain things, not everything. So you have a very fragmented information which you're trying desperately to bring into one equation to comply with a metrics which doesn't do anything. That doesn't sound a very encouraging ways of accessing and solving problems. So what needs to be done is transformative. It's a major change to bring some holistic approach to solving the problem. And maybe this is because I'm an entrepreneur. I like to do things. I like the action. So it's about doing. It's not about measuring. It's about doing. So how do we do this? Well, first of all, we need to take all these systems and all these data and integrate them in one single platform where we can actually see what really is going on, not in a siloed way, but actually in a completely horizontal way. The problem is human beings. I mean, look, just UK is 20 million assets. Every European country is around the same. The US is 10 times that. So it's impossible from a human perspective to use the existing environment of technology and put them all together, creating APIs and having all these little platforms talking to each other. It's just not going to happen. There is one tool which will make that happen, and that's artificial intelligence. Because artificial intelligence will give us the possibility to have all these sets of data, and there are millions of them, and these systems, and there are also millions of them in these billions of buildings around the world to actually talk to each other and link themselves to each other. And that is fundamental in understanding what we are. If we want action, if we want to change things, we need to understand where we are. And consequently, we need to first have this initial approach. The second thing is AI has one advantage as well. It learns. Consequently, we're not just going to aggregate and sync data around the world. We are going to start to create new data with it because we can think now. So we can start to deduct. It's Descartes who was saying, I am because I think. So the same happens here. Because we have all this data, because we have all this information, suddenly we can start to be smart. We can start to create new data. We can start to understand better what's going on without even trying to find it in the real world because we actually created it. And that's it. That would be the third stage, which is extremely important. The last stage in order to really finalize that is to try to create after that a vision of the industry, a dashboard, if you want, where suddenly instead of having what we have today, these millions of different systems, and we would be able to have a holistic picture of what's going on. That is how you can start to set up a policy, because then you can start to take action on something which is really covering the entirety of the problem. This is true for ESG, but it's true and it has consequences on many things. Let me give you another very quick example on buildings as well. Everybody is talking about valuations of buildings. And of course, that's the major factor of what real estate assets are all about. It's about the valuation. Valuations of real estate assets so far, historically, because of the structure of the technology and the data we have, has always been what we call deterministic, which means we are using information from the past to try to project the future. And that's how we are moving forward with valuation. We believe that with a huge amount of data, far more than what human beings could deal with, we can start to have an approach which is more stochastic. What does that mean? It means that we can start to have scenarios based on probabilities. It means that we understand the situation today and in the past, and suddenly we have probabilities of events happening in the future. And that can touch anything. It can touch macroeconomic numbers. It can touch socioeconomic numbers. It can touch sustainable and environmental numbers. It can touch anything. And you can establish probabilities of these numbers to happen in the future, consequently having a probability of valuation in the future based on these factors. So the consequence of all this is that we are suddenly changing completely the way the world think about real estate and energy, as we talked about a second ago, but valuations too. And consequently, we have a totally new environment. Now, you might say that I'm a prophet and I'm trying to preach what the future will be. Well, no, actually, this is real stuff. We are already involved. My group of investment companies are already involved in all these projects. We are already doing it.
Well, the possibilities are extremely exciting and the implications for big business are very clear. But what about smaller companies and even individuals? I mean, there are obviously opportunities for technology to benefit all of us. What does that look like to you?
So you're touching here a very, very, very deep question, which actually I like a lot, because I do believe that this is fundamental for our society going forward. So it's not just about a business question, it's actually a society question. I'm a great believer in one thing, which is data, information, education gives people knowledge, enable them, and consequently allow them to suddenly create value and consequently wealth for themselves. And if I would be head of state, and I'm sure that every head of state in the world would think the same way, that's the first thing I would like to do. Because if I enable my population to be smarter and create wealth for themselves, that is a solution to my entire economy and my entire country. So I think that the same is applicable to small and medium enterprises. As you know, today, financing of SMEs is a major problem, not in emerging markets only. It's a major problem anywhere in the world, including mature markets. And the financial institutions, which are theoretically lenders, do have an issue in scaling up their SME financing. And consequently, it is necessarily a slowdown factor for everyone. So how do we solve that? Well, once again, AI and data is a major factor for solving that problem. Why? Because AI will be able to access data anywhere in the world on anybody or any SMEs. And once we have that information, we can then have pattern. We can understand better the credit worthiness of a company, for example, versus just the accounts which are filed once a year. And once we have that, we can start to create lending models which are taking into account all these factors. Once we do that, then capital will have no problem to reach these SMEs because they will lend on an informative basis where they will understand perfectly who they are lending to and why. And I think this blocking factor can be resolved extremely easily using AI and using large data sets, so big data. And I think that this is a topic where, you will not be surprised if I tell you that we're already involved in this too.
Of course. Well, if we could zero in on FDI for a moment, governments around the world are competing actively to attract inbound investment, and it's more challenging than ever in the current climate. So you could help out some of the governments and policymakers in terms of explaining what the private sector and what investors need from them. So as an entrepreneur yourself, what do you think public sector officials could do to help attract more FDI and better harness the benefits of this kind of development?
So you're correct about the fact that entrepreneurs need to interact more and more with the public sector and government sectors because the partnership between the two worlds is absolutely necessary. In fact, I'm an entrepreneur, I'm an investor, but I get more and more involved into policy agenda of governments. And I'm speaking to you from Dubai today, and that is part of my role at the advisory role of the Dubai Chamber of Digital Economy here as well. And I do contribute to that over here. So the incentives which have to happen, first of all, have to be aligned. There is a very important factor of having, on one hand, a strong and very active government support. That goes without saying. You said it, and it's perfectly true. The focus on innovation is extremely important, but it has to be focused on structural needs. We have to understand what are the transformative fundamental factors, and that is where the innovation has to go. Okay?
Well,
we have to have a long-term vision as well. This is not something which is done for a government who wants to have a short-term result or an investor who wants to have a quick buck over the next 2 years. That's not going to work. This has to be very long-term decisions, very long-term policies, and very patient capital to fund it, because that's what it's going to take. But if you remember what I said earlier in this interview, I mentioned that there was a revolution going on. And if I'm right, and this is the new industrial revolution, well, in that case, we have to be patient, because the way we're going to live together tomorrow is going to be totally different, and that will take time. And that's true for policies, and it's true for capital. So we have to go through that journey today. And then finally, I mentioned this previously in my previous sentence, which is we need to have this link between this partnership between the governments and the private sector and the private capital.
Great. Thank you, Christophe. I would so much love to ask you many more questions and to keep talking to you. Your insights are extremely valuable, but we've come to time already. Thank you so much. I think your advice there for many of the public officials who be tuning into this broadcast are extremely helpful to them. Thank you for sharing all your insights and your expertise with us.
Thank you very much.
And thank you all for watching.
Thank you, Mrs. Courtney and Mr. Christophe, for taking the time to join us and share your views on such an interesting topic. We look forward to hearing a lot more in the future.